In this video we will discuss about how to implement expensive reporting that will not slow down your business. Expensive reports are for everyone involved. Employees hate filling them and finance terms who are often struck with the inevitable task of chasing down employees to turn in their recipes, yet processing them. In short, expensive reports can be a drain on both time and money. The salesperson who purchased a new headset, finance needs their receipt. The manager who needed a new laptop and dongle, finance also needs their receipt. Office manager and executive administrator who routinely purchase supplies. You guessed it. Finance need their receipts. Even with digital receipts, you can run into issues come tax time if they are not limitized, or if your employee made a purchases with their personal credit card and not a company card. Thankful to last advances in finance automation for expense reporting easier across the board. Here are 5 ways that automation can less the burden of expensive reporting. Virtual cards. Instead of employees having to use their own credit cards and getting reimbursed later, virtual cards allow employees to make purchases online on anything from software subscriptions to office equipment. Virtual cards can be created in seconds and help to eliminate manual date entry and reconciliations. They have also less prone to fraud since they cannot be physically stolen, don't store personal information, and are easy to cancel. Recipient matching. When artificial intelligence technology is applied to expense management, expenses reporting becomes much similar. For example, artificial intelligence powered receipt matching can automatically collect, verify, and reconcile the majority of receipts to automate employee expense reports, and in some instances the movement and employees spends, they can instantaneously submit receipts via text or email. Merchant and category rules. When finance terms have to manually code and process transactions, it can really slow things down. Merchant and category rules remove their unnecessary step, allowing users to easily import documents and create mapping rules for any accounting field, like merchant or department. From there, transactions can be categorized and assigned to your general ledger. Account software integrations can help make for a frictionless expense reporting process. Features like universal CSV upload provides flexibility and can help you close your books faster and more efficiently to ensure an easier closing process. These integrations are especially helpful come tax time. because the IRS requires purchases of more than $75 to have a receipt when the nature of the expense is unclear. This functionally can help streamline your tax filing process. Real time spend visibility. Want to get a glimpse of every transaction as soon as it happens. You will want a platform equipped with real time reporting to help you make faster financial decisions. Artificial intelligence powered savings insights can automatically helps you pinpoint ways to save your company money in the future by uncovering duplicate subscriptions, increase in speed, and unused partner rewards. The ramp and Amazon businesses advantages. Expense reporting is a breeze thanks to the new ramp and Amazon business integration. Both ramp and Amazon businesses are designed to help save documents, time, and money. Thanks to built-in spend controls and with ramps, Amazon businesses, receipt matching integration. Ramp will scan all of your transactions and automatically generate receipts for any purchase you make. Shopping of the business's items you need has never been easier. Ramp offers advanced virtual cards, merchant and category rules, accounting, automation, and more for Amazon businesses users. Ramp also allows you to monitor all of your expenses in a single streamlined dashboard with direct integrations for accounting software like QuickBooks, Zero, Saga, and NetSuite. You can close your book 5 days after faster when you can use ramp, not to mention it's free.